same thing it was doing over here, it's doing the same thing over here. Okay, so that's gonna be a consolidation box, and we'll go more in detail with it right now. Now let me go through the next question real quick. But overall, I check the charts every now and then, depending on the setup. So let's go ahead and show you how it is that I know how to determine for how long I'm gonna be in the charts. Okay, I'm gonna give you guys a quick overview of what it is before I trade. Okay, so that way you guys know exactly what I'm doing. So it's for time frame. So we know this is the daily Fibonacci. Okay, so I'm gonna go ahead and erase that. We did on the daily. I'm gonna put my psychological level that we had set. It was 112. And this video is gonna be recorded, so that way you guys can take advantage of it. Okay, because sometimes I do talk really quick. So if I am talking quick, let me know. I get excited. So 112 level is coming back over here. Now, how am I gonna determine on how long or how much time that I need to spend on the computer every now and then, how like often I need to check it? Okay, you determine by your Fibonacci levels. Your Fibonacci levels are gonna help you identify your structure. So right here, the market, what it's doing, it has been doing an impulse, retracement, impulse. So what I'm gonna do, I'm gonna go ahead and put my Fibonacci from point A, the start of the impulse, to point B, end of the impulse. Okay, we're on a downtrend right now. So what I'm waiting for now, I'm waiting for the market to come up, potentially to a 61.8. I mean, sorry, 38.2 or a 61.8. Okay, so what I'm clearly going to be doing, I'll be highlighting those areas. But also another thing I want to take into consideration, I want to look in the past and see what's been respected the most. So right here, I see like the 50-point Fibonacci retracement has been respected the most. So you see a lot of consolidation, came out and bounced. So that's what I'm actually going to be looking for the market to come up to. I'm looking for the market to come up to this area, for it to potentially bounce off of that area and be rejected and continue going down. We can either look at that area or we can look at this area right here. Okay, so there's two areas I'm looking for on this pair itself. I'm waiting for the market to go up to the 50-point Fibonacci retracement or up to that 0.786. Okay, now that would be a small retracement on your H4 time frame. Your H1 time frame, what would we see? Would we see breakup structure? What would we see? We would be seeing the market, respecting the structure overall from here. So it can potentially go up to that area and do another fall down again. Okay, so that's right there. You would pretty much see how long it took from this fall to all the way over here, which is 4 full candles of H4 time frame. So that's 12 hours. So for it to come over here, that'd be about 6 hours at least. So there's no reason why to go back on USDJPY and analyze for 10 hours or analyze for 2 hours a day or so on, because we know it's not going to happen until 6 more hours at least. Okay, so that's how often I get on the computer with trading. Now, next one, use 7:39 p.m. Do you recommend looking at 1 hour? First, identify what we need to do. Okay, so what is that I usually do to identify my structure? Okay, what is it that I need to do first? I'm gonna do a checklist. Okay, so make sure if you do have a pen and paper, make sure to write these down. Okay, this is a checklist that you guys want to take into consideration. So D1, which is daily time frame, you want to look for support and resistance. Okay, H4 time frame, you want to look for structure and fib respect. H1 time frame, and fib placement. Fib and fib placement. H1 time frame, you want to look for consolidation and fib respect. And M30 PA. Now, can somebody tell me on chat what is PA? What's PA? Does anybody know? Price action, exactly. So that's what we're going to be looking. We're going to be looking for price action, okay? On M30, price action. Perfect. So these are the rules I go over every single time. Every single time. You want to be able to do this. The more checks you have, the better it's going to be. So this is your checklist that you're going to be doing when you're analyzing. Now you also have another checklist, which is your confirmations. more confirmation like MA cross, structure, like trend line, pullback, stuff like that. That's just going to confirm more stuff, okay? But these are the things that you want to have every single time you do a trade, okay? You want to know where your support and resistance is. You want to know your Fibonacci retracement, your structure, your consolidation areas, and PAs, okay? So take that in consideration, write it down. I'm going to be going over it with you guys right now, okay? So right here, I'm going to go ahead and I kind of don't want to delete it. I'm not going to delete it. We're going to go ahead over here. So in the market, right here, what is this right here? Is this, what kind of structure do you guys consider this area? All this. What kind of structure is it? Uptrend structure, perfect. So now it is uptrend structure. So on an uptrend structure, what type of structure do we make? What are these points called? This point, this point, this point, this point. Higher highs and higher lows, exactly. So we're on an uptrend structure. We have higher highs, higher lows. Okay, I'm gonna go ahead and label this right here. We have our higher highs and higher lows. Now, next thing I'm gonna have is one thing that probably not everybody knows, but some people do know, okay, is what are these movements called, which I'm gonna tell you right now. Now, if I have a move up, okay, from this point, okay, point A, all the way to this point B, what is this move called? Does somebody know? If you do know, impulse, exactly. So that right there is an impulse. So you want to go ahead and impulse. We have an impulse. Now, our Fibonacci, this tool right here, what does it measure? What does the Fibonacci measure? Does somebody know? It measures retracements. Perfect. So our Fibonacci used to identify where our retracement is. And those retracements are going to be areas in the market where we can potentially look to identify structure levels in the market. So structures that has been generated. So we're going to be looking to find that higher low, or we're going to be looking for that, what is it? Higher low and then lower high, okay? Those are going to be the levels that we're going to be looking for. So it helps us identify areas in the market that potentially can be identified as structure, okay? So it's key levels in the market that we can, find areas to buy or sell into. So we have our impulse, and then we have this right here, okay, which is our retracement, okay? This move down is called a retracement. So the market, the Fibonacci, measures our retracements, okay? Now, what levels of Fibonacci do I usually look for to identify in our Fibonacci levels? 38.2 and 61.8, okay, perfect. So to do this properly, one thing I gotta do when it's an uptrend, H4 time frame, okay? Let's say we already did our D1, which is our daily time frame, our support resistance. H4 time frame, I'm gonna look for structure. So now that I look for structure, I wanna identify structure with our Fibonacci's. So I'm gonna put my structure and my Fibonacci from point A, which is start of the impulse, to end of the impulse. This is point A, this is point B. I'm gonna go from point A to point B, and I'm gonna look to identify 38.2. Okay, so look what I'm doing. I'm highlighting my Fibonacci levels, okay? And this is the reason why I'm highlighting them, because I like having my charts clean. So what I'm gonna do, I'm just gonna highlight my 38.2 and 61.8 and take my Fibonacci off, okay? Now I know that those levels are gonna be 38.2 and 61.8. Now, that's gone through, I'm gonna go, what's my next checklist? What do I need to look for? H4 time frame has been checked. We have our H4 time frame, we have our structure, we have our Fibonacci set. So when I'm looking for them, when I'm seeing the market starting to retrace, okay, when it's starting to retrace, that's what I do by Fibonacci. Now, my next checklist is go to H1. Okay, that's the next one and we're going to be looking for consolidation and fib respect. Now that we're looking for consolidation and fib respect, is the market respecting my Fibonacci level on 38.2? Yes, exactly. So it's respecting my Fibonacci level, so I'm going to take that in consideration. Now, the next thing I want to know is, like, do we have consolidation in the H1 time frame? We do, okay? We have respect and we have consolidation. So we have checklist 3 checked. Now, the last thing we got to do is going to look for price action, okay? And price action is going to be PA, perfect. So what I'm going to do, I'm going to go to M30 and look to identify that price action. Okay, which clearly price action is, we're going to be looking for bullish price action or bearish price action. What kind of price action are we looking for? Go ahead and type it on the chat below. Bullish, okay? We're looking for bullish price action. Perfect. So right here, what we're able to identify, does somebody know what this is called? Let's see. Engulfing, exactly. So we are seeing a bullish engulfing candle. So now that we're seeing a bullish engulfing candle, there's one thing I gotta take in consideration is never going to trade before this candle closes. Okay, we do not enter until that 30-minute candle has closed. So if I'm on M30 and I'm putting my price action, I'm basing my price action on M30. That means I'm entering on the 30-minute time frames. Okay, so I'm either entering at 8 o'clock, 8:30, 9:30, 10:30, 10 o'clock. Every 30 minutes. That's the only time frames I would be entering in a trade. I would not be entering at 10:35. I would not be entering at 10:60, or I mean, there's not even 10:60. I wouldn't even be entering on 10:50. Okay, so only 30-minute time frames. Closes, you enter, perfect. You have everything structured out. You have your stop loss, you have your take profit, and so on. Okay, so one thing, by you being patient enough to wait for that 30-minute candle to close, one, you're preparing yourself by already identifying where you could potentially go to, by putting your stop loss, your take profit, and while you're doing your stop loss and take profit before you enter on your trade, you're already looking at what lot size you should put, okay? What's the proper lot size you should put for this trade, okay? So right there, you could have entered off of that bullish engulfing candle. You could have done this, put right in the structure, and 2 to 1 would have been around there. So you could have potentially been in profit, small drawdown, and then immediately into profits again. Okay, so you could have potentially got either 42 pips, or you calculate the full move, which is around 70 pips. Okay, so that's the checklist I do every single time when I'm trading. Okay, I always follow those rules. Structure, impulse, retracements. I want to know what the impulse and retracement is, so that way I know where to place my structure, my Fibonacci's. Next thing I want to know is, and you do this all. No, trading, which is my charting, I do it on my laptop. Okay, I have done it on my phone, but I do not recommend it. If you are already to that point where you're very, very consistent, then yes, it's okay to do it on your phone. The one reason why I don't do it on my phone is because I know, well, there's only one way I would do it on my phone, okay? The only way I would do it on my phone is because I already have it on my laptop, and the only thing I did is copy it every time on my laptop and paste it onto my phone trade, so that way I can just go up and check on it. That's the only reason, but I would not do the chart ups on my phone. I would only put the levels, that's it. But by putting the chart ups, doing the analysis on the phone, no, okay? Only if you are like really good at it and you are consistent enough to do so, you can go and do so. But me personally, I do not like doing it on the phone. I'd rather do it on the computer, so that way I can see the full image. Do you recommend looking at usually? I honestly only use the candlestick formations, and moving averages is the max. The other thing that we'll do, like the moving averages with the 18 pip moving average, or the 8 exponential moving average. Okay. Now I'm gonna go ahead and go to the next one. Oh, we got several questions now. We might not go through all these questions, but what I'm gonna do, this is recorded. So while we're going through these questions, okay, I might not be able to answer them all, but I will go through the recording tomorrow, and I'll see through the questions I was not able to go through. So that way I can do the best on my side to do a video, so that way you guys can have it into the dashboard as well, okay? So let's see. So I went over David's good, okay. And what are the most profitable currencies? The most profitable currencies are gonna be the ones that move the most, but also they're gonna be the ones that create the most risk. Now, the most profitable currency that I trade right now at the moment by pip wise is GBP AUD, because I see it moves an average between 100 pips, 200 pips, and so on a day. So you can catch a really good move, 30 pip move, in a matter of an hour, 2 hours, and you're good for the day. Like today, I was able to catch about 120 pips. The trade was sent out to the advanced group, Facebook group, yesterday. So there was a good potential of 83 pips to be captured right there. So GBP/AUD is a really good pair to trade, and it's one that you'll be seeing me trade a lot often on my Instagram. Okay, so I usually post them on my Instagram, so if you don't have me on there, go ahead and add me as Mercy Legend. I post some of those onto the Instagram as well. But let's go over to the next one. What stock market do you target the most? So, I mean, the currency I look at the most is USD/JPY. That's one I look at the most. And then I look at GBP/AUD, and then the last one I look at is AUD/USD. Those are the three patterns that I look at the most. Then when I'm really bored or I just want to look at other pairs, is Euro/USD or Euro/JPY. And those would be the next one I'd be looking at. What are the price signals you look at? I look at bullish engulfing candles. I also look at, let me go ahead and show you guys, okay? I have these down over here for you guys. Let me see, bullish candles. So this is the bullish ones. So this is one of them, okay? So it's a evening star. So I'm looking at the evening star overcoming 60% or more. A evening star is formed by 3 candles. First candle is bearish. Second candle, maybe a doji, indecision, or hammer. As you have doji, indecision, or hammer. Third candle must overcome 60% or more from the overall candle. So right here, it's overcoming 60% or more. Okay, that's one of them. And then I'm gonna go over with this one as well. This one right here is a 4 candle bullish variation. That we look for 2 bearish candles, 2 bullish candles. This right here, between these 2 bullish candles, it must overcome 70% or more from the overall pattern. And that's what gets me a bullish price action, okay? So these are 2 of the bullish price actions that I look at the most. If you find them, I literally get in, I jump in no matter what. And it's always gonna be on M30 time frame. I look for these, okay? I look for those on M30 time frames. Now, let's go ahead and see what was the next one. Where do you put your stop loss if you enter a position? I usually put my stop loss so before I enter a position, I want to know what is going to be my stop loss, okay? No matter what, because your stop loss is going to help you identify how much you're risking. Without a stop loss placed before your trade, you're risking money that you probably don't have in your account, okay? And that's something you got to be very, very disciplined. You want to be able to see where you're going to stop. You're going to put your stop loss. You're not going to enter on the phone like, man, this looks good. I'm going to enter on the buy. And then, oh, what's my stop loss? No, because when you enter on the buy, just by seeing it's looking good, you probably put a 0.10, you probably put 1 lot. And, you know, that's not good if you don't know exactly where the direction is and how much drawdown you can potentially obtain off of that trade. So you first want to identify your stop loss. So right here, let's say if I was to see a stop loss, honestly on this trade itself, by the looks of it, it all depends on how well it's respecting your structure, how well it's respecting your Fibonacci. So like right here, I was seeing it was respecting very well. So my stop loss would have been like right in this area from entering over here. Okay, and then I'm always looking for 2-to-1 ratio. So my stop loss are usually, my drawdown is between 8 pips and 12 pips. My stop loss are going to be seeing them at between 15 or 18 pips stop losses on USDJPY. It varies on the pairs, okay? Varies on the pairs depending on the liquidity and the volatility that it has. How do you read candle charts? So only charts I can, these are the ones that we're reading, which is the candlestick charts, candlestick formations. We look at price action, okay? So we're able to identify this by price action. How do you get into the Facebook group? Go ahead and send me a DM to this. I think that'd be the fastest way so we can get everybody into the Facebook group. So go ahead and send me a direct message. Tell me, hey, I jumped on the live this day. I'd like to enter onto the Facebook group and we'd get you started. Okay, so everybody that wants to go into the Facebook group as fast as possible, that'd be the fastest way. Send me a DM onto that one and then I'll do my best to add you guys throughout this week. The latest would be this weekend, okay? But I'll do my best to add you guys all by this week. Let's go ahead. Do you determine your take profits and fib extensions? No, I do not determine my take profits depending on my fib extensions. I determine my take profits on support and resistance from the past. Okay, I depend on my take profit and stop loss. Sorry, one is my support and resistance, but overall is how much does that pair move? Does it move 100 pips a day? If it moves 100 pips a day, max I'm gonna ask for is 60. Okay, I'm not gonna ask more than 60. If it moves 30 pips a day, I'm only gonna ask for about 15 or 20 pips. Okay, you don't want to catch the full move, you just want to catch most of the move. Okay, do you use any EMAs at all? Are they trustworthy? Yes, I do use EMAs, which are the EMAs is going to be the 8 exponential. Okay, the blue 8 exponential, which is this one right here. Okay, and yes, they are good for extra confirmations. As you can see, I don't have them on my charts all the time because I don't use them all the time. I only use them for extra confirmations to see the overall movement of the trend. Okay, so that just helps me to identify if I'm still going to be in trade or if I'm going to enter trade by knowing the cross. Okay, if it cross, perfect. If I see a trend line, perfect. If I see structure, perfect. If I see Fibonacci greater and then price action, that's what gets me in. If I have all those confirmations, I'm going in with a good confidence in the market. when you're looking at price action, what exactly are you watching or looking for? I'm looking for the candlestick patterns that we went over right now, which is either bullish or bearish. I look for bullish engulfing. I look for bullish variations or bearish variations, depending on where the direction of the market is headed to. Okay. And the fib means, especially we are looking at. Yes. So Fibonacci's. Okay. These numbers. So let's say if I was to put my Fibonacci. Okay. If I was seeing that the market was doing this, if I see the market was going up, okay, that's an impulse. The Fibonacci measures retracements. So the Fibonacci measure retracement, I start from point A to point B, which is first start of the impulse to end of the impulse. Now the retracement is this: how much percent did it go down? It's 50%. So it went down half of the percent that went to the impulse. That's 50%. If it went more, then obviously 100% would be way down here where it started the impulse. So Fibonacci helps me measure the retracement. That's what it does, okay? And those numbers are the numbers of the percentage that it has gone down. It's gone 23%, it's gone 38%, and so on. That's what those numbers of Fibonacci are. And 38.2 and 61.8, it's just the kilos I mostly look at because they're the ones that have been back tested the most based off the strategy that I've been going. And also because they're the ones that have been respected and they have a greater impulse. 38.2 is always gonna have a more loud and greater push than any other one, okay? So how can I access to the recording after the webinar? Facebook group, okay? So you'll have access to the recording by the Facebook group, so make sure to send me a DM on Mercy Legend, and then I'll do my best to add you as soon as possible. Can you show how to determine price action? Yes, that we just went over price action, so there's the bullish engulfing candles and those other pair I showed you. What are the EMA levels? EMA levels are going to be the 18 EMA, and then, the 21 moving average, and then also the 8 EMA, okay? Those are going to be the ones. And then once you get really good with those and see how everything's moving on, then you'll move on to the 18 instead of 21 moving average. How about your stop profit? My stop profit, every time I see the market, if it moves 15 or 20 pips, I move my stop loss to a stop profit at least 2 or 3 pips above my entry. Okay, I always do that. It's always safer to get out with at least $1 than get out with -10. Okay, if you make only $1 one day in trading, your trade was positive $100 and it comes back down and it hits your stop profit at $1. Don't be mad. Don't be sad. Don't you made $1. It's better to make $1 than lose $1. Okay, so always be grateful on that end. Okay, it's an extra $1 in your pocket and an extra $1, not a $1 that you did not have the day before. Okay, so always make sure to be able to secure profits. How do you use the ABC tool? ABC tool is very simple. It just pretty much helps you identify areas in the market, the waves. So like right here, from A to, so it's pretty much to identify moves in the market. Okay, so it's A, B, C. So big moves. It's like A, retracement, and then C. So those are going to be the ones that you're actually identifying. Just helps you identify movements in the markets, Elliott waves, and so on. But we don't really go too much into Elliott waves. It's overall structure. ABC tools just help you out with Elliott waves, but you can use it as areas in the market that act like structure. Can you also use how to use triangle patterns? Yes, I will go over that. I'll go over the patterns next week. Okay, so that way I can actually be on with you guys for a while. As you guys can see, we actually have a really good triangle pattern right here. It's a really good one. I'll go over that next week, okay? So that way we can have more time and go over patterns next week. I'll specifically go over patterns next week. And I did want to go over moving average. I want to go over moving average and RSI divergence, but let's dedicate next week for patterns, and we'll dedicate it for moving averages, so RSI indicators, okay? And then we'll also do a Q&A, but I won't answer all the Q&As because I want to focus on that for next week, okay? But today I am going to be going over Q&As, and then from there we're going to be moving on as the weeks keep on coming, because I want to provide you guys the best knowledge so you guys can actually be making profit and so on, okay? So going with the analysis on fake out, how to determine a fake out. So determine fake out, you're most likely going to see those on 1 hour, 30 minutes, or 15 minutes, okay? The way you determine your fake outs is just go to bigger time frames. Go to bigger time frames, see what the overall direction is, and you'll trust me, you will not get a fake out on bigger time frames. M30, you'll get fake outs like this right here. You'll be getting all those big wicks, but if you go to bigger time frame, like H4 time frame, it's gonna be really, really hard to get a fake out. Okay, you can't get it because look at this. Right here, this was fake outs. I assure you this was fake outs on the M30 right here. But H4 time frame is still maintained its structure. So you go to bigger time frames. When do you higher highs and lower lows switch? Higher highs and lower lows switch when structure has been broken. So when structure has been broken, we're going to be able to identify this right here. Okay, so when structure breaks, we're seeing the market coming up and coming down. So coming up, coming down, coming up, coming down, coming up. Okay, this right here is structure. Market comes down, breaks that structure. Okay, so it broke this right here. So now we're seeing new structure. So right here, higher highs, higher lows, higher high. This right here is a low low because lower than previous high. This right here is now a lower high. Okay, so that's how you determine how to break structure. Do you still use resistance support on H4 time frame, or should I depend on D1? Yes, I still use it on H4 time frame also, but overall move, you want to see like a really good change of structure, you want to see a really good change of momentum, or just get those quick entries in the market where the market is most likely going to be rejected. D1 is going to be the best way because bigger time frame. So there's a lot of rejections in the past on D1. There is going to be a really good probability of there being rejection on that area on lower time frames. But once it hits that key level of D1, okay. So with that said, I want to be able to go over some more stuff next week, which is, like I said, we're going to go over moving averages. We're going to go over RSI divergence because I said I wanted to go over today, but time's running real fast. I went over a lot of questions. So I'm going to dedicate today for Q&As, but looks like we've gone over all the Q&As. If you actually have more questions, go ahead and type them in. And the next questions I'll be, taking the recording, putting, see I can do the best I can to create content and load it up onto advanced course, okay? While your EMA levels, the ones I use is moving average is 21, simple. And then the next one is EMA, which is exponential moving average 8, 8, okay? So the simple one, 21 simple, is gonna be red, and the exponential moving average is gonna be blue. Is a steep trend line good trend line or most likely to be broken? It's a steep trend line. Steep trend lines are most likely to be broken, and when they are broken, trust me, they break and they fall hard. So like right here, this trend line was steep, and when it broke, look what it did. It just fell hard. Okay, so steep trend lines are most likely to be broken, and when they do break, trust me, it will have a big fall. Okay, so take in real life consideration. Now I'm gonna go over real quick. I'm gonna go over GP80, see what I'm expecting, and then finish off the meeting with GP80, okay? I believe I'll only be going over that one. Using GP is really, really simple, honestly. I'm just waiting for a retracement, okay? If you guys can go ahead and do this as well, point A to point B, identify that 50-point Fibonacci retracement, or that 78. You're gonna be looking for the retracement, then you go to H1 time frame, see a consolidation in that area, and then based off that consolidation, then we see if we enter for sign opportunities, okay? Now, next one is going to be GP80. What are we looking at the market right here? We're looking at the market is, let me go ahead and put this in. ADX, yeah, I can go over ADX. I can also go over ADX moving averages. So like moving averages, if you guys like have some specific moving averages that you guys want to go through, go ahead and put them in the Q&As, okay? And I'll have them for next week for you guys. But the ones I really want to top bases on is the RSI divergence. I saw somebody put ADX. I'll go over that also. I have a strategy for ADX, and then moving averages. Okay. Thank you. All right, so I'll be going over all those next week. Okay, moving average and stuff like that. So if there's specific moving average that you guys want to go through, take advantage of the Q&A. Put them in there. If there's specific things you guys want to go through just next week or the next week, take advantage. Put them in there. And I'll go over them. Okay. So. Like these recordings are for you guys, so you guys can learn as much as possible. These are so you guys can take advantage and learn what you guys actually want. Okay, so the strategies that I go through on the advanced course are the strategies that I utilize, but also there are more stuff that I do know, and if you guys want to know them, just go ahead and type them in. Say like, hey, I want to learn how to do this. And I most likely already know how to use that. So go ahead and type those on the Q&A. So I'm gonna go ahead and go with GP80. GP80, we've been seeing that the market's been going up. Hit take profit, perfect. Let's go check out what this market's doing. So for this, I can clearly see the market just keep on going up, right? So since it keeps on going up, I want to go to the higher time frames. D1, what's going on D1 time frame? Wow, the market has been over here in a while. So since it hasn't been over there in a while, next thing I'm gonna do, I got a bigger time frame, weekly. What's going on the weekly? There we go. Now that I have that on the weekly, let's see our support and resistance. What's going on support and resistance? Trend lines. Which are lines right here? We have this line right here, which obviously is the line where I had. Let's see. What's going on right here? Okay, we passed that line already. We were on the weekly. So see what I'm doing? I'm going to bigger time frame just to identify what levels are that could potentially be rejected, or where it could come to. So right here, that's my next level. Okay, right here. That's the next level I'm looking for. So I'm gonna go to lower time frame, D1. Now also, one thing you want to take in consideration here, look how, oh, it's actually not that far. Okay, you do want to label these. So W for weekly, and then T for tap. Weekly tap. Okay, I'm gonna go ahead and put weekly tap so I know what's going on in the market. Now D1 time frame. Is there any close area? Okay. So the market's currently right here in this area. Okay, you can clearly see in the market's been respected right there, been respected right there. So we can probably see a small pullback before it continues on going up, but overall right now, the market's still bullish. It's very, very bullish. Okay, so we can still expect the market to continue going up. There's a lot of momentum. It has not stopped, but one thing I'm going to take in consideration, same thing, okay? It's going to be the same thing we did last time, which was, I believe it was last night. So right here, you want to break, clear break, come back, test, continue. Or that's going to be scenario A, go back and continue, or break, come back, test, and continue. That's simple. Consolidation is the most simplest way to trade, but it's also the hardest because it's so simple, okay? So simple to actually respect what you're supposed to do. Now I'm gonna go ahead and lower this down. Let's see what's going on. So you wanted to do that, okay? You wanted to close above that rectangle. If it doesn't close, okay, and by close I mean like you want it to close, like you want the candle to be on top of that, okay? So like right here, I wanted to close, it closed on top and it went, okay? So that's what we're looking for. We're looking for clear closes. H4 time frame, let's see what's going on. Same thing, okay? So that's the only trade I have going on for today. I'll probably be taking out a lookout for this. You can most likely trade the break of it. Okay, if you see a lot of momentum in the market, just goes up and the candle closes above that rectangle, I'm potentially going to be looking for at least 50 to 80 pips. Okay, so 50 to 80 pips. Let's go ahead and see what's going on. Now I'm saying 50 to 80 pips because this pair just moves a lot. I like the way it moves. Now right here, if it does break, I'm looking for about, and let's go 60 pips, 65 pips. And then if it is to go down, then we'll be looking to at least potential about 82. Okay, so there's either scenario A, 65 pips, or scenario B, which is around 80 pips. Okay, that's what we'll be looking for on this pair. Now, what sort of concepts do you look at the most for a buy or sell? I look for the ones that I went over earlier today. Now, if you didn't see or you weren't on here before, go ahead and go through the recordings. I'll be going over some of those questions, okay? So, you look at buy and sell. And I'll be going over all these questions right here. Okay, I'll be going over them by next week, and I'll be seeing if there's any videos I need to do. I'll make those videos as soon as possible so they can be into the advanced course for you guys, okay? Now remember, this course is for benefit of all of you guys. I want to take care of you guys as much as I can. So the way I can do that is if you guys fulfill on your side by, asking questions and just letting us know what would be the best way to help you guys out on, okay? And I see there's 39 questions. So these 39 questions will be answered, okay? All these questions will be answered, and they will be answered and most likely make a video off of them. So yeah, that way you guys can take advantage of it, okay? Now, I'm not gonna say a certain day because those will be a lot of videos, but we'll be constantly uploading videos onto the advanced group so you guys can take advantage of that, okay? So therefore said with that, I hope you guys had a great session. Now, if you guys had a great session, just please say yes on there so that way I can leave with a smile today. And therefore, we'll see you guys on the next video, which is going to be next week, same time, same day, 7:30 Pacific Standard Time on Thursday, okay? So I'll see you guys next week, 7:30 Pacific Standard Time. Awesome. So I'll see you guys there. Thanks for joining today, and I'll see you guys next week. Bye.